Let's get back to the main subject at hand with Jim Kelleher of Argus Research and our own Tom White back with us. Welcome back, Tom.
Good to be back.
Hopefully you've reacclimated from Australia. Things, you know, it's like 180, right?
Absolutely
Up
not.
is down, black is white.
Yeah. Everything goes in reverse.
All right. Hey, Jim, welcome back to the show. Joining us, Director of Research and Senior Technology Analyst at Argus. So how great were these numbers, Jim? The market sure loves them from Nvidia.
Right. Well, they were routinely great for the last few quarters. We've seen Nvidia guide the quarter ahead billions of dollars above the pre-reporting consensus, then 3 months later beat that consensus by billions of dollars and do it again. It's a lot to take in, but I would think one of the key takeaways from a P&L perspective is that we're seeing Nvidia do what we saw Apple do, what we saw Amazon do, which is grow its revenues so rapidly, and its operating costs are scaling not nearly as quickly. So the operating leverage in the model is spectacular, and so you're seeing earnings estimates for fiscal 25, which they've just begun, and the new fiscal 26 just going through the roof. So a lot of operating leverage in the model, and after another incredible performance.
Okay. The beat here for the next quarter means their growth is going to stay above 200%. I mean, 265% annual, something like that for this quarter, and they're going to be able to hold on to 230% of that, it seems like. So I guess technically maybe like peak growth, but who cares really when it's 200%? What does all this mean for the valuation, Jim? Will people just pay up anything for that kind of growth?
You really don't have to. Again, reminds me of Apple when it was in its iPhone ramp days. The PEs on Nvidia, the 2-year forward PE on Nvidia is below its trailing 5-year PE. And similarly, in all the other price-based metrics, it's really not getting super expensive. I think another real key takeaway is when you go back about 1 year, Nvidia was trading in the 2-somethings, the 290s maybe. They held their GTC compute conference, and the world really got to learn that Nvidia was behind ChatGPT. And we learned about their training and their inference platforms. And in particular, we learned about DGX Cloud, which enabled delivery of Gen AI as a service over the cloud. And that was really when the stock took off and when the interest took off. And now we have another GTC compute event coming in March, the 2024 version. That's going to be another huge galvanizer for the stock because you're going to see a lot more exciting new products coming from this company. So it's hard to know how high is up, but honestly, the valuations are not enormously stretched right now.
Yeah, big difference between the forward PE and the trailing, right? As this is all about a recovery, a big reversal of fortune in the trajectory. Who's the big buyer here? I mean, obviously data centers are booming again. Is that the core of it right now? Who's the main client that they're selling these chips to?
Well, so they did mention that over 50% of their revenue was coming from the big CSPs, the big cloud service providers, and they are very interested. You can't really set up a large language model in your basement. It takes enormous hardware and software. You need to have it delivered across the cloud. So these are the natural, traffic cops of Gen AI delivered as a service. But they also mentioned certain enterprise verticals that were very, very strong. Pharmaceutical, genomic mapping, drug discovery, financial services for everything from fraud detection to, personalized finance, and other industry verticals that are, social media companies, et cetera, that are really buying in. So there's lots of ready customers, and also every single nation, every region, with the exception of China, is a major buyer here. China, of course, is prescribed from buying the top-end technology.
And it's a great description of all the verticals, really good visualization of where all this stuff is going to use. Good knowledge there. As far as China goes, Jim, it's like the one soft point. Does anybody care at this point about China, given how weak it's already been?
A lot of people are always secretly rooting against China, but what Jensen pointed out is that they're working on workaround products and things that are work within the U.S. Prohibitions, and they will come up with some competitive product. But really, the demand everywhere, there's you know, Kelleher, the CFO, talked about the demand for sovereign AI, and there's a realization that honestly, being, you know, AI is part of the national strategic imperative in every nation now. So you can't, you know, there's all these intelligent AIs out there. You can't leave your nation at risk. So there's absolutely global interest and fascination with these products from Nvidia, and that goes through, you know, service providers, cloud service providers, enterprises, and even nations.
Jim, is there anything from a corporate shareholder activity standpoint for Nvidia at $770? I mean, obviously they don't need like cash right now, but I mean, what about a stock split? I mean, I'm assuming they wouldn't issue any stock. They don't need to, but when you have this type of massive market cap accumulation, does it at least give them options? I mean, I don't see them like paying a dividend out because they're growing, but are there any kind of stock or financial manipulation they can do?
I mean, they had the stock split, I don't know, it was about a year ago, maybe they went 4 for 1. They could obviously do it again. If you really want to be in a price-based index like the Dow, like Amazon is going into because of their 20 for 1 split. They do have a dividend. It's fractional. It's not even 0.1%. And they never change it. It's 16 cents a year. They'll continue to do buybacks. They did attempt to make a big M&A deal with ARM, and that didn't happen. So at this point, the money is just piling up, and we'll see how it plays out. But another stock split is certainly a possibility. A major acquisition could be a possibility, but they're getting so big, it's hard to know what exactly they might want and how it might benefit them from buying something.
All right. Great stuff, Jim. Thanks for the analysis. Appreciate the recap.
Sure thing.
Very helpful. All right, Tom, you got 2 trades on it. Hit me. Let's get into it. You got a bullish and then a slightly less bullish.
Yeah, somebody came out with a note on short sellers and how they were getting hurt today. And so far this year, I'm like, who's selling this stock short? Yeah, exactly. Crazy. Even though it's got 2.47 billion shares outstanding, so it's got a big share float also. So looked at this 2 different ways. The first way I looked at it is maybe neutral to bullish, where, hey, you know what, this thing can pull back. I mean, it's hitting all-time highs today, but there's a chance that it can pull back. Giving myself a little bit of duration, about 3 weeks.
Okay. This is your cautious trade.
Yeah, a little bit more cautious, taking advantage of higher probability of success, staying risk defined in a $770 stock. So going out to the March 15th, the monthly series, 22 days to expiration, selling the 720 strike put, out of the money to the downside, about $50, and then buying the 700 strike put, short, neutral to bullish, $20 wide put vertical, collecting roughly about a $6 credit. It's moving all over the place right now, but if you collect that $6 credit, that's what you can make, $600 per spread with about $1,400 in risk. But like I said, you're giving yourself over 60% probability of that short 720 strike finishing out of the money at expiration, which is what you want. So even if the stock does pull back, you can profit on this one, profit in 3 out of 4 scenarios in this type of strategy. Implied volatility levels are down, but they're always relatively high in Nvidia, so you can collect a pretty hefty credit on this out of the money short put for
$600 to bet against Nvidia going under 714. I mean, seems like a pretty darn good trade right now.
Yeah.
All right, you got one that's a little bit more aggressive if you want to kind of shoot for further gains, though.
Yeah, as I mentioned, implied volatility levels are down, but they're still elevated, right? If you're buying options in here, you've got to take that extrinsic value that's in every option into point here when you're looking at trades like this. So looked at an unbalanced call butterfly to the upside, not buying a vertical, not buying an outright call. I want to give myself a little bit less risk or cost basis on this type of bullish trade here. So going out to the April monthly cycle. So giving myself nearly 2 months in this position. So it gives myself some time where I'm going to buy one of the 750 strike call that's currently in the money, sell 2 of the 800 strike call, so a bullish $50 wide call vertical, and then to wrap it all up, buy one of the 810 strike calls. So you're buying a $50 wide call, bullish call vertical, selling a $10 wide neutral to bearish call vertical to offset some of the costs. You're paying roughly about an $18 debit. So there's your risk, $18 or $1,800 per spread, with the apex of profitability being at or near that short 800 strike, which the stock hit 778 just about 10 minutes ago. So you don't need that big of a move to the upside, but because you made it unbalanced, you break even 768 to the upside. We're basically there right now. Anything above that level is going to be profitability. Now your profit drops a little bit above 810, but it's still more than a double on this type of position where you can offset some of your costs as opposed to if you bought just the 750, 800 call vertical, it's going to cost you a little bit more money, but you're giving up some of those gains above 810 on this one. But it's definitely a bullish trade.
All right. Makes sense. Yeah. I mean, a little more aggressive. Yeah. The high probability premium collection, though, I think I like that one a little bit more because it just seems like it's locked in. I mean, I know it's not, but it's, you know, options math telling us it's a high probability trade.
Yeah, remember, the last couple earnings, they blew out numbers. The stock pulls back a little bit, then consolidates a little bit. So giving yourself a higher probability of success while still staying risk defined. You know what your downside is on these type of trades.
It's amazing, the chart. We are now trading fully above the previous high on the candle. So I think there's a name for that. I don't know what it is. I'll have to ask Rick later. All right, thanks, Tom, for the trades here in NVIDIA.